Hey everyone, this is Joanna O'Neill, and I haven't gone live in a while. I have not been motivated or inspired to hop online and talk about anything, but I am super fired up that I felt like I needed to get on right now and share some information with you. As some of you know, I am an entrepreneur. I'm a health and wellness entrepreneur. I have owned and currently own several different businesses. I believe most of them are in the health and wellness field. I don't want to say 100% in case off the top of my head I'm missing something. Um, so I am a serial entrepreneur that invests in different businesses, and I'm involved in different businesses. And I have done that and been so for over 15 years. And right now I'm in our home in Reno, Nevada. I'm looking up at these gorgeous mountains. And this week has been a whirlwind of meeting with the different business partners that we have here in Reno. So many of our businesses are located in Reno, Nevada. This is where we live half the year. We have other businesses that are focused in um, Arizona as well. So it's just been a really interesting week, literally having business meetings and dinners and breakfasts and meetings with all of our different business partners and in different businesses. And it's been great, but I'm just reminded of how this idea of being an entrepreneur and the risk that can be involved, risk to time, risk to resources, risk to money, risk to reputation, all of these things you are putting at risk when you start a business. And I have had the privilege of being involved in many businesses, and back in the early days when I was investing in and opening and operating businesses, I made a lot of mistakes and I lost a lot of money and I lost a lot of time. And the truth is we're not really losing if we only make that mistake once, right? And we can learn from that mistake and not repeat it, and kind of take that information into a next venture and make smarter decisions. And over these years, I've just started to see a pattern of all of the things that low risk businesses and high viability, so low risk, high viability businesses have in common. And I just feel so compelled to share this with people. And I certainly share this with people on a one-on-one basis. Literally, it's been happening like once a week. I'm getting emails or phone calls or referrals of people saying, hey, I'm thinking about starting this business. What do you think? Or would you take a look at the business model? Or would you take a look at investing? Or what do you think of this? And every time something comes across my desk like this, I kind of just take a deep breath and I brace myself for what I'm about to see, what kind of business idea I'm about to see. And sometimes I have to take a day or two before I can really patiently read the business model and do an assessment of it. And I'm going to give you an example. I'm going to give you an example in a minute because somebody sent me something like this today. And I'm going to give you an example because this is why I'm so fired up. But what I do want to tell you, and I'll remind you guys at the end, is that over the last couple of months, I've been working on something called a business model fitness survey. Okay, I've created this business model fitness survey. It is a very short survey that any potential entrepreneur, any potential business owner could take in a matter of 2 minutes that would quickly assess the risk of a business, of the business model that you're looking at, or a business that you're involved in, and kind of just give you a generalized risk assessment. And then it's an opportunity for a conversation, right, to kind of break down why it showed up as a various level of risk. So I'm going to offer that to anybody for free if they want to take that business model fitness survey. I will put the link in the comment section if anybody wants to take that and have a conversation with me about it. But I'm just going to give you an example. Okay, I'm going to give you an example. I I have several traditional businesses, and you know, that's a fine thing to do, a traditional business where you have to, rent a location and hire employees and all of that. There's a time and there's a place, and there's also a requirement of a lot of freaking money. So there's that. But what I want to talk to you about today is this idea of network marketing companies, network marketing businesses. Because for those of you that know me, know that I'm involved in the most amazing company in the world, my favorite business model in the world, and it happens to be a network marketing company. But this is the example I'm going to talk about. So somebody sent me an email today saying, hey, my friend is doing this business, and here's a little video about the business, and it looks pretty cool and it looks kind of awesome, and I wanted to get your thoughts on it. And so I took a look at it. I spent the last hour, because I get sucked in and I start doing this research. I start digging in and looking at, okay, the company history. Okay, so these are some of the things. These are some of the things that you want to look at. So if you want to take notes, this is what you can start taking notes about. The company history. How long has this company been in business? How about who runs the company? What does the executive team look like? Like, what does their experience look like? What did they do before they started running this company? Look at their, what is their background? Where do they come from? What is this business? What do they do? Do they are they in the is it a service business? Is it a product business? If it's a product, one of the things you want to assess is what percentage of the population, what percent of the population could potentially be your customer? Is it 5%? Is it 25%? Let me give you an example. If the business you were thinking about going into was toilet paper, like I want to go into the business of selling toilet paper, and I'm asking the question, what percentage of the population would be a potential customer for that business? Toilet paper would probably be 100% of people. So that's an example. Okay, so what if the company was in the business of selling? I'm just going to tell you one of the things they were selling: a little tiny little sticker that you put on your cell phone that combated the radiation waves from your cell phone. I'm not exactly sure how to explain it, which again is another issue, because how are you going to explain the product? But it's a little sticker that you put on your phone that counteracts any of the negative effects of talking on a cell phone all day. Okay, so that's one of the products they sell. So the question I would ask is, what percent of the population is a potential customer of that product compared to toilet paper? 1% of the population? Maybe 1% of the population cares about that. Maybe 2% of the population cares about that. Okay, fine. So you're going to be in the business of trying to explain and sell something to people that only 1 or maybe 2% of the population is interested in or has the money to pay for something like that. Then the next question is, how often are your potential customers going to reorder that product or service from you? Right? We call this the opposite of retention, the opposite of reorder or retention, the opposite of that is attrition. So what is your attrition rate? How many people that shop with you for a little sticker on their phone to combat the negative effects of a cell phone, how many people are going to buy that from you next month, or the next month, or the next month, or the next month? One of the businesses I have here in Reno is a yoga studio. We have a beautiful yoga studio here in South Reno. And we have a membership program whereby people get to have unlimited yoga if they become a member of YogaPod, and they pay a monthly membership fee. And I did a calculation before I got on this live because I wanted to know what our retention rate and therefore what our attrition rate was per month. And we have about a 5% attrition. So meaning if we started the month with 400 members, we would lose 5% of those people by the end of the month, which is 20 members. Of course, not of course, but our particular business, we grow by more than we lose. So we probably grow by 10% every month. And our attrition is 5%. So we're growing by about 5% a month. Great. Awesome. 95% retention. Amazing. 5% attrition. Awesome. When you look at something like a little sticker that you put on your phone to combat the negative effects of a cell phone, what do you think the retention of that customer is? How often are they going to reorder your product, give you more money? As a business owner, we must be thinking of the customer acquisition cost. How much does it cost to acquire a new customer? When you get into business, you start to realize that the cost of customer acquisition is very, very expensive. And then that leads to the next realization that when you do acquire a customer, the last thing you ever want to do is lose that customer, because you've just spent so much effort and so much time and so much energy and so much money to get that customer. So then you want to keep that customer and you want to keep them happy and you want to keep selling them products and services that they need and they want. So when you're evaluating a business, you want to think about what percentage of the population is in the market for the product or services that I'm going to sell, and how often are they going to come back and buy this product or service from me? What is the retention and what is the attrition? This is very, very important. So we're going to look at, the track record. We're going to look at the management team. We're going to look at, what product or service is the business involved in? What is the reorder rate? What is the retention rate? What is the attrition rate? How about investment? You want to look at how much it costs to start that business. Does it cost you $1 million to start that business? I think, when somebody opens up a McDonald's, I think they're supposed to have $2.5 million in the bank, and they're going to have to get a loan or, invest over $1 million. It's probably closer to $2 million. I don't really know. Maybe you guys know and you could say something, but it's a lot of money. It's a lot of risk, and then, or what if the business that you're investing in costs you $20,000 to invest? Or, some businesses, maybe it's $1,000, I don't know, but you've got to look at what the investment is, what the upfront cost is, whether you're going to have to get a loan for that money, whether or not you're going to have to keep contributing to that business. You have the initial investment. Well, what's the ongoing investment? Are you going to have to invest in that business every year? Are you going to have to invest in that business? What's going to happen if you run out of money? Another question, do you have to hire employees? Do you have to have a facility, an office, a warehouse, a storefront? All of these things are part of assessing the risk and viability of a business. And I tell people all the time, because people get excited about great products and they get excited about amazing services, and they get excited about, oh my gosh, something. I mean, even yoga, oh my gosh, I'll just use that as an example. Oh my gosh, we love yoga. Yoga's amazing. And we need to bring yoga. Yoga needs to happen. Well, just because yoga is amazing and yoga is awesome and we love yoga, that doesn't mean that owning a yoga studio is a great business decision. It can be, but the passion for it and the enjoyment of it and the love of it and the need for it does not a business plan make, right? So it's just important that people are really thinking about all the different aspects that contribute to the viability and risk involved in owning your own business. And if you are unclear about any of this, I encourage you to take my business model fitness survey that I've created. And it takes about 2 minutes, and you can do it really easily. And then once you take that survey, you're going to get an automatic assessment of the risk. Like, it's going to send you an automatic email telling you what your risk is. And then we can get on the phone and talk about it. It's my mission. It's my mission in life to save people from bad business decisions. So help me help you. With that, I'm going to let you go. Thanks for listening, and feel free to share this with people that you may know, your family members, your friends, your neighbors, your children, your parents that are thinking about starting a business, and they might need some advice, because my advice is free. Okay, guys, take care. I'll post the link to the survey in my comment section.